August Biniaz with Real Estate Investing Demystified. Again, we're here in beautiful Scottsdale at a Vertical Streets Ventures conference. I believe it's their second conference, and we're with our good friend Peterson. And right before we started our interview, we were kind of prepping and talked about being an LP, being a GP, being a broker.
Yeah.
Talk to us about what you do and what brings you to the conference.
Yeah, so I am a lender. That's my main focus. So we are a mortgage broker out of Dallas. Although I don't live in Dallas, I live in San Diego. I do no business on the West Coast. I do it all. I'm a nationwide lender. So we work with banks, agencies, which is your Fannie and your Freddie, with bridge lenders, CMBS. I work with some hard money lenders. All of that money goes towards syndications that I do myself. So we've got a deal in Houston that we're using a bridge on and renovating all the units, and buy and hold is what we're looking to do.
Awesome.
But I also, capital raise. So I'm here really, you asked the question, why am I at Vertical Street? So I'm a real connector. How do we connect partners with vendors, with people that, who can help who?
Absolutely.
So,
I've seen that. I mean, you're saying that you're a connector is an understatement.
Yeah.
But talk to us about something else, because you're a real estate professional, not in this what it means as far as IRS goes. You're a professional, meaning that you're a broker, but you're also involved on the general partnership and syndicating deals.
That's right.
How difficult is segmenting your time between your main profession and syndication? Is it fair to say syndication is a side gig? Is it parallel? Is it on an equal platform?
The IRS would say, it has to be 750 hours. I think I put probably, because I'm connecting with so many people, I call my desk the control tower, because I've got investors that are coming saying, hey, do you have any deals? No, but I have another deal over here with someone else. So that's capital raising. But at the same time, hey, what are you working on? And can I provide the debt? So it's really a 50-50, 60-40 time split for me.
Got it.
I just have a huge passion for real estate. I got started when I was 22 with my first asset. And, as we all know, they go up and they go down. So you can win and you can lose.
Yes. Cyclical. Real estate
really
is cyclical.
It really is. So we really, for me, it's a passion, and I get to live my passion every day. So.
Got it. Let's take a segue to your main part of your business, which is lending.
Yeah.
Let's talk about debt. Let's talk about the environment we're currently in, and we'll come back to the syndication again. So
sure.
We're in an increasing interest rate environment. There's still inflation. The Fed is trying to fight it by one of his main hammers, which is increasing rates. And, the markets have accounted already for 25 basis points, coming out next month, I believe.
Yeah, potentially, right? Who knows?
As a broker, right, which you've seen with the kind of choppiness of the environment over the last year, as far as some GPs being in trouble, both on the institutional and retail level, with Blackstone and GPs in Houston that we saw. Is the advice right now to sit on the sideline waiting to see what happens with inflation, with the job numbers, with the Fed's funds rate? What is the advice right now?
Well, I mean, listen, I think there's deals to be had out there. Here's the thing. There's 90% buyers and there's 10% sellers. So it's like the mob. Let's all run to the one that's up for sale.
And those 10 sellers are not that motivated anyways. They got long-term debt on there.
Potentially.
Yes.
But there's also some bridge loans out there, right? They don't have cash flow, right? I speak to people all day long. Hey, how's it going? We're not, we've got the bank with our DACA. They're doing cash management. At what point do they say, I'm done. I can't do this any longer? And those are the things. Those are the ones that we're looking for opportunities, right? Everybody is out there looking for opportunities. Is that going to happen in quarter 3? Is it going to happen in quarter 4? I think there's going to be opportunities. Like there's always opportunities. I think it's going to be over a period of time.
Let's talk about those opportunities. I was on a panel speaking in Las Vegas at Omar Khan's event.
Oh, yeah.
And I seem to be the opposing side to this concept of deal flow and flood of deals to coming to the market, because I said that I don't believe there's going to be a huge amount of deals coming to the market. Even if they are, that larger groups, institutions will get their hands on those deals first, because if banks get involved and deals are in distress, they want to make sure that the buyer is a buyer that can deliver, not a group that's syndicating is unsure. Is it fair to say?
I'm with you on that. I'm on the same position. You know, the question is, are we going to see a huge decrease? Do we see that, you know, interest rates historically, they go up, and it's about 8.7 months that we're holding before it slashes and burns. All right. So when is it going to slash and burn?
But before they have brought it up, they have stopped it. They might have. I think they even dropped it down and then they pulled it back up because inflation wasn't subsiding.
Right. In 19.
Could that happen again with us?
Sure.
Or is rents lagging, and 30% of CPI's rents is lagging, which is going to bring it down. So there's all these different counter arguments here.
Right, and it depends on who you talk to. Neil Bawa has one idea. We've got Peter Linneman coming on a Zoom at 8 in May, who has a different outlook than what other economists are. So it depends on who you listen to. And, you know, listen, at the end of the day, we're all trying to buy assets. And, you know, if you can get in with the seller, you know, I think there's opportunities in smaller deals. Some of these new folks, especially here at a conference, where they're trying to get in, make ways in. They can get into a smaller deal. You know, you have to start somewhere.
Let's talk
right?
about that. Let's talk about that because you are so involved in this space and you've seen the journey of many different groups in their kind of growth. Talk to us about your perfect growth plan. As for someone who's looking to get into the general partnership of a real estate, you know, a deal, if be it multifamily or other asset classes, what does that journey look like? Should they start as an LP? Should they get a coach? Should they co-GP and then eventually build a real estate private equity firm? Like, what do you see? What's the most successful path you've seen that groups have taken?
I always say two things. One, you need to get educated. And whatever that looks like, you can't come off the street and say, I'm buying, right? From a lending position, you have to have experience in multifamily. You can't come off the street from a single family and say, hey, I'm buying commercial real estate. So you really have to educate yourself and be a limited partner. Those are my two things I say. You've got to do that. You have to see how other people are operating. And when you're looking for the right operator, making sure that they have a good track record. I think it's very easy to say, be opportunists and put your money with somebody, but if they don't have a track record, I think you're putting yourself at risk, right? So that's really, really important. Building those relationships.
Got it. Let's do a rapid fire prediction. So, as far as the debt world goes, what you know, you somewhat said your prediction. Is it fair to say the Fed will raise another 25 basis points? It'll go flat for eight months or 10 months, and then it'll drop. What is your?
For me, I think we're going to continue to see it climb 25. I think we're going to see another 25.
Oh, wow.
That's my prediction.
Okay.
I think June we've got another increase. That's my prediction.
Yes.
And
which could potentially make more distressed assets coming to the market.
Potentially, right?
Yes.
I would like to see us get rid of this inflationary environment, right? It is. We saw it back in the 90s, right? When we could not, or the 70s, sorry.
Yes.
When we could not get rid of the inflation. And by us taking our foot off the gas, we're potentially continuing in that same route.
It's on a good track. It's good. It is dropping. It's on a good track.
It is, but and as Neil mentioned yesterday, it's the fact that it could stay around. We don't want it to stay around. We want it to get going.
Yes, 100%.
Yeah.
Okay, so you made your prediction there. Let's talk about regions. Is there a region that you're bullish on? Is there something you're seeing that a lot of sophisticated and sharp, astute investors are looking at? What are you seeing there?
Yeah, listen, I get a lot of loans looking in San Antonio. Okay. I see a lot going on in San Antonio. Rents are not necessarily increasing like, everything's going down, right? I really like Des Moines, Iowa.
Okay.
I like Grand Rapids, Kalamazoo, Michigan. If you can find something in, Tampa or Jacksonville, maybe. Okay. Miami, right?
All right.
Hard to find.
Florida.
Right?
All right.
Dallas is always going to be great.
Yes.
Long term. These are long-term projections. These are the places you want to be. I'm not sure Houston is where we all want to be going, but it's been affordable. So all these new folks coming in, they were able to find deals. They were able to be successful in that market. I think the right location, in Houston can be great, but
Awesome.
it's pretty random.
Julianne Peterson, thank you so much for your time. Let our viewers know how to connect with you, how they can get in touch with you, both for your brokerage business and for potential syndication, or just they'll get a chance to connect with you.
So great, thank you. So I'm on all of the social media sites. LinkedIn, it's Julie Ann, A-N-N-E, Ann Peterson. And I also hold a Tuesday Zoom at 8 call. It's live with really great investors.
Could I get an invite, please?
Oh, yes. The invite is here.
Right.
Here it is.
All right.
It's www.dancinginvestments.com. Dancinginvestments.com. That'll get you in the door. So would love to invite everybody.
Thank you. We'll put it in the show notes. Thank you again.
Thank you. That was fun. Appreciate it.